This is the World Financial Report podcast. My name is Randy Marshall. Joining us is our financial and diamond expert, Harold Siegel. We're taping on February 21st, 2019. Our time is 8:10 Mountain. Connect with Harold at rarecoloreddiamonds.com. rarecoloreddiamonds.com. The markets this morning. US dollar 96.47. Canadian dollar 75.87. The pound at 1.30. The euro at 1.13. Gold at 1,334.60, silver at 15.90, gold silver ratio 84, platinum is 828, palladium hit $1,500 this week. We'll talk about it here shortly. It's at 14.55, WTI 56.98, Brent 66.90, nat gas is 2.68, Bitcoin 3,901.90, Bitcoin in Canadian 5,141.22. The Dow is at 25,888, S&P 2784, NASDAQ at 7469, and the TSX at 16,031. The TSX has been on a little bit of a run, closed above 16,000 points yesterday for the first time since October the 4th, almost 2 full calendar months into the year. The TSX has only suffered 8 losing sessions in 2019 and is now up nearly 12% year to date. Heavyweights like Toronto Dominion and the Royal Bank of Canada have contributed to most of the run higher this year, and they're about to be put to the test with bank earnings that are going to be starting tomorrow. Big news for us though, Harold. Palladium smashed $1,500 during the week on shortages in palladium that are causing investors, car companies to drive up the price due to an acute shortage of palladium. There's a quote we have in our free weekly newsletter from Philip Clapwick, Managing Director of Hong Kong-based consultant Precious Metals Insights. He says, until you get an increase in supply coming on stream, which isn't going to happen for a few years yet, this is going to result in tight market and prices generally trending higher. Palladium is very strong right now, Harold.
It certainly is. I mean, just really an unbelievable run. $1,500 and where palladium could ever be more valuable than gold and platinum, is just an unbelievable thing. Now, again, we've been bullish on platinum. We recommended platinum many years ago at $170. Made a lot of money on palladium. But at $1,500 and going higher, now, most palladium comes from Russia. So Russia's notorious for playing games with supplies and things like that. But the price can only go so high until it prices itself out of the market. It's actually done that before. Back in the time when palladium actually made a move up above 1,100, which absolutely shocked the market and absolutely almost bankrupt Ford because they were a heavy buyer of palladium at that point, and palladium just made a run that almost bankrupted the company. So again, it's shocking to see palladium at 1,500, especially when it's got the same components and does the same job as platinum. Don't forget, it was always platinum that was way too expensive, and palladium was at $170, $180. So they converted the use of catalytic converters into using palladium more than platinum. Now they're going to have to go back and do the opposite, because you're talking that platinum is half the price, basically, of palladium at this point. So it's going to eventually price itself out of the market. Personally, I don't know too many investors that are buying into the market at this particular point. I think the market really made this move primarily because of the hedgers in the market. But again, just an absolutely amazing run of $1,500 in palladium. But I do put my money on platinum as the biggest mover in that market coming forward, because again, I just don't see this happening. The other thing is that gold is moving back up. We had a big day this week. One day, I think it was on Wednesday, that gold was up $14, $15 on the day. But the fact is, silver is not doing anything. So the ratio between gold and silver is getting bigger and bigger. Gold is 84 times more expensive than silver. Back in 1979 and 80, when gold hit $850 and silver hit $52, the ratio between gold and silver was 16 to 1. At 84 or 85 to 1, it's just totally out of whack. And the other thing about silver is that when gold in 2011 made its all-time high and hit 1920, the highest price gold has ever hit. Silver only went back to 50. So we never saw the follow-through or the run-up in silver that we did in gold. In 1979-80, when gold and silver both topped out, gold topped out at $850 and silver topped out at $50. In this run in 2011, gold went to $1,900, so $1,100 more than the high that we saw back in 1980, but the price of silver only went to the same price. So it's gold that really made the huge moves at that point. Now, we are in for the whole run of silver. Silver ran from $3.80 all the way up to $50. It was a phenomenal run. We all made an awful lot of money, but the biggest money it was in gold from $250, obviously up to $1,900. It was only when the exchanges started raising the margin requirements, which was ridiculous in 2011, and dropped the price of gold from 1,900 all the way down to 1,050. So that's why the heavy support level for gold right now is at 1,050, and the resistance is at 1,380. So always remember that number, because again, we've seen the price of 1,380 almost get broken about a year and a half, 2 years ago. Got to 1,370 and change, but never could break 1,380. In order for me to be convinced that gold is going to break out and run again, we'd have to have two closes in a row above 1,380 that would signal then that the price of gold is going to go higher. The one thing that bothers me tremendously about the way the gold and silver trades is that the government has allowed manipulation in that market far more than any other market. We saw manipulation in the stock market. We know that there's a plunge protection team that at times can stop the market from falling and getting hurt, but that does not exist in the commodity markets. And we've seen, situations like the one I had brought up in 2011, where the exchanges purposely were allowed to raise the margin requirements and basically scare all the speculators out of the market and take away the advantage of leverage. So, the manipulation in the market has always been a situation that has really hurt the market, hurt the credibility of the market, and really bothers me personally, as somebody who's traded the market as long as I have.
Harold did recommend palladium, and I remember it was at $180 over 10 years ago, and those that invested have done very well. To give you an idea, palladium is at $14.55, gold is at $13.34.60. There's over a $100 difference. Now on silver, and Harold was touching on silver, Hochschild Mining is halting their Peruvian mine on low silver prices. They have been forced to halt operations at the Arcata gold and silver mine in Peru, saying that low silver prices have left the company little choice aside from suspension. But Harold, that's another factor when you're investing in metals, really anything, production cost. And if you can't make a profit, then you're just going to shut down and wait until you can, or get out of that business and get into something where there's a better profit margin. But here you have a silver mine due to the lack of profit.
Well, there's no doubt that makes sense, because the production cost of silver is substantially higher today than it ever has been. So at $14, $15, there's not a lot of profit in silver to own it type of thing, or to mine it or produce it. Don't forget, we've seen silver at $50. We've seen at 35 and 25, and those type of numbers are profitable. But the market has basically done nothing for the last several years. From 2011, when the market bottomed out in gold and silver, silver went down. At that point, silver was as high as 50, and it dropped down into the 10 to 12.50 range. At that particular point, we saw a massive sell-off in silver, and then we also saw the massive sell-off in gold, which caused gold to drop basically from $1,900 all the way down to $1,050. So we saw basically a $900 drop in the price of gold, and that was orchestrated. That was made to happen. It was planned. The same thing with silver. Silver dropped from 50 all the way down. I think it went to about 1250 at that particular point again, and just absolutely destroyed the market. So if the production cost, if silver doesn't start getting back up to, $25, $30 in that range, many of the mines are going to shut down. And the fact is that silver has not done anything for such a long time. It's just losing its luster. And you've got the fact that gold, is trading at about 1350 now. So it's made a sizable move. It's only about $40 or $30 away from breaking through a major resistance level. And if it does that, we could see a major run in gold, and it may not bring silver with it, because gold has always brought silver along with it. But it isn't happening at this point. Silver's trading in a very, very tight range and really not doing anything. And unless it starts to break out very soon, you're going to see a lot more mines shut down.
You can read that story in our free weekly newsletter about silver. Also, 2 stories on palladium. Palladium smashes $1,500 as shortages ignite record-breaking rally. And also Johnson Matthey saying palladium supply shortfall will worsen this year. Get our free weekly newsletter, the companion to the podcast from Harold. Connect with him at rarecoloreddiamonds.com. rarecoloreddiamonds.com. Harold, looks like the Canadian dollar could be headed down even further. CIBC, Canadian Imperial Bank of Commerce, sees the Canadian dollar falling to 15-year lows on weak exports. They're saying the Canadian dollar may need to fall to 140 per US dollar in order to make firms more competitive. So far this year, the loonie has averaged about 133 per US dollar. They're saying that they predict the currency will drop to 136 by the end of 2020, but there is a very good chance we could be headed to 140. So the US dollar is fairly strong, as we're seeing here today, at around 96.47, Canadian dollar at 75.87. So if we see the Canadian dollar go down further, we could very easily be in a situation where we have a Canadian dollar around 70 to 72 cents. And that obviously is good for exports, but if you're a Canadian and you're buying things from outside the country, it gets very expensive. It would not surprise me to see the Canadian dollar go down further, Harold.
It's unfortunate. It truly is. I thought when the government was raising interest rates and strengthening the dollar was for that specific reason, was to prop up the price of the Canadian dollar, and now they're going to be dropping it. For Canadians traveling to the U.S., it's going to be very, very difficult. You're losing 40% on your money there, type of thing, and that's not something that is comfortable for most Canadians because, let's face it, you're taking a 40% haircut. It's a horrible situation for Canadians. Yes, it will help the economy as far as exports go, but it's certainly going to hurt in other areas. So the currency markets obviously are very important now. In the U.S., don't think that things are that great, because they're not. The thing is with President Trump is that, and here's my feeling on this, is that if he was to be thrown out of office, or if this situation with Russia really has any type of legs to it, you could find that if he was impeached or thrown out of office, or they found collusion with Russia or that type of thing, I would think at that point there that the U.S. dollar would drop substantially. I would think that we would see a huge drop in the U.S. dollar, in the U.S. stock markets, and gold would rally very strong based on the fact that the U.S. dollar would drop at that point. So this isn't engraved, in stone at this particular point, that the U.S. dollar is going to go back up over par. In actual fact, in the U.S., we're in a very, very dangerous time right now, and a lot of it has to do with what's going to happen with Trump, and if there's any legs, to this Russia situation, and there's quite a good chance that there is. So if that did happen, we could see a total reverse of the U.S. markets. The U.S. dollar plummet, you would see the U.S. stock market plummet, and you would see other currencies, obviously move much stronger against the U.S. dollar. So I don't think that is that far away either. I think that the news coming out could come out within the next 30 days or less. And if we do find out that there was collusion between Russia and Trump, and if you look at how many people have been fired or put in jail or fired or let go from because of their association with the Trump government and their association with Russia, it's actually quite concerning. There's got to be at least 13 to 15 people in the Trump government that have had tie-ins with Russia, and you've never ever heard that type of situation before. So again, it's quite concerning to me. And again, if I would look at one factor that could bring down the U.S. economy at this point, it would be that. It would be a direct tie-in to Trump and Russia. And at that point there, you would see the U.S. markets fall apart.
The only way to be safe if you're a government official is to have the last name Clinton, it seems. Fed, the minutes came out yesterday. Fed says they're going to be reducing the balance sheet. That will be ending. Notes risks and uncertainties. Minutes from the January Federal Reserve meeting reiterate the central bank's new patient policy stance. The meeting summary also features extensive discussion of the Fed's impact on the markets. Officials say they expect to keep rates steady for now, but left room for hikes later if conditions do improve. We know in Canada that Toys R Us, they do remain in business. In the United States, they went out of business. Another big retailer that went out of business in Canada, Sears, they're struggling to stay alive in the United States. It was announced this week, and I don't buy a lot of shoes, so I'm okay here, but Payless Shoe Source has filed for bankruptcy protection in Canada and the United States. They are going to be closing all their stores, and it's stunning what the CEO said, Stephen Mariotta, in the release that was sent out. The closures are happening because prior reorganization left the company ill-equipped for today's retail environment with too much remaining debt and too large a store footprint. Harold, it's a crazy time in the retail space. You see places going out of business, filing for bankruptcy in the United States and Canada.
2,500 stores. You've got to imagine that 10 people work in every store at least. You're talking a lot of people being let go. You're also talking, if you're looking at the unemployment factors, you're getting all these retail giants that are closing down. Those people are not finding new jobs that quickly. The retail business is a totally different business today than it was when we were growing up, type of thing. So, now it's Amazon, it's online, everything is online, and, the brick and mortar stores are going to be gone, which is going to affect the real estate market. It's going to affect the real estate market for certain, and it's going to definitely hurt the employment business, the employment markets. Between robots and between retailers going under, I don't know what the future is the foreseeable near future. We're not talking an awful long time. We're talking that robots are working right now. And if you get, a lot of these major corporations that bring in robots as opposed to hiring people, the unemployment numbers are going to be horrendous. So I just don't see the growth, Randy. I just don't see it. I don't see this as a positive in any way. I see this as a huge negative, and I really don't see how the middle class is going to get through this. And Bernie Sanders is going to be running again as a Democrat here in the U.S. for the elections, and this is a guy that wants to tax the wealthy and give everything to the poor, to the people that aren't working and can't make it on their own. That's a socialist government, and again, it doesn't work in Venezuela. It doesn't work anywhere else. Why in the world would it work in the United States with 300 million people? I just don't see it.
Well, the big head shaker last week, Amazon, they were looking to expand their headquarters somewhere in North America. There were many cities that were competing for that second headquarter. New York won. But those that are opposed to jobs, if you can wrap your mind around that, the Ocasio-Cortezes, the Bernie Sanders, they went after Amazon. And Amazon decided last week, you know what? We've had enough. We're not going to have our second headquarters in New York City. New York will lose the bulk of 25,000 jobs. Now, what did Ocasio-Cortez say? This new socialist Democrat who was just recently elected in New York City and is in Congress and wants this Green Deal where cars go away in 10 years and we're It's
Oh
just
my
bizarre,
God, how
but
stupid
she
is
was
this woman?
cheering. We won the day. Yes, fantastic news. I'm thinking, lady, 25,000 good paying jobs went away. Charlie Munger, who is the right-hand man for legendary investor Warren Buffett, said that California, Connecticut, New York, they're stupid for driving rich people away. And he thinks it's absolutely crazy that a state or city would do that. There are a number of places that have shot themselves in the foot, according to Munger: Connecticut, California, New York. I think it's really stupid for a state to drive the rich people out. They're old, they keep your hospitals busy, they don't burden your schools, police departments, or prisons. Who wouldn't want rich people? Now, $1 Million Listing Agent Ryan Serhant, one of the two shows that I just love to watch, it's my little guilty pleasure. $1 Million Listing New York, $1 Million Listing Los Angeles. I just love those shows. And Ryan Serhant said buyers are freaking out about Amazon ditching New York City. We put, I think, 15 different apartments into contract, purely speculative, based on the Amazon move. All 15 of those buyers called yesterday freaking out saying, should I pull my deposit? Amazon coming, I think, was a great thing, said Serhant of Nest Seekers International. All they wanted to do was bring jobs. Harold, I don't know. I completely do not get it. When you're chasing away 25,000 good-paying jobs, I understand there's going to be tax breaks and other things that need to happen, so it's not pristine or perfect. But somebody was going to get one heck of a good-paying job to chase it away to somewhere else. I sure don't understand it.
No, it makes no sense, but I don't know why they would have chosen New York anyways. You're talking not only is it the most expensive city in North America to live, but on top of that, it's got state taxes on top of, your federal taxes. So I would think that they would go to a place like Nevada or Florida where there is no state tax, where the standard of living, is still extremely high if you want it to be. But living in New York, the rents, the homes, everything is so expensive. And then add to that, you've got a 10% state tax. It makes no sense. But that idiot politician,
Ocasio-Cortez, yes.
oh my God, it's infuriating to listen to somebody like her. I mean, I don't know how in the world she ever got into office. And to say the stupid things that she's saying, I mean, she's the one that wanted a 70% tax on people that are worth over 10 million. Who in the world would do that? Nobody's going to pay 70% of what they've put away in the state taxes, at 70%. It's a ridiculous thing, and for her to come out to make these stupid, I'm just shocked that anybody would even vote for this person. So it's really, really discouraging, Randy, to be in the United States and to look at things objectively and sit back and see, what's going on. Where you've got the Democrats that, want to do what they want to do, just give everybody money. And then you've got Trump, who, again, is fighting and fighting and fighting and trying to do the best job he can. But, again, he's such a bully and he's such an egotistical guy that, he's just adding so much fuel to this fire that's already going on. It's a very, very difficult time to be in the U.S. In this political atmosphere, because these people are just so difficult to deal with and so hard to understand as to why they come out with the things that they do. It's very difficult when other people are making your decisions for you.
Well, when the Republicans were running to be the presidential nominee the last go-around for U.S. elections, Hillary Clinton just had one opponent, that was Bernie Sanders. But there were so many Republicans. Now this go-around, there are so many Democrats. They're going to need about 2 or 3 halls for all the candidates when they go to debate. No one will be able to properly debate because there's so many candidates. Like Harold said, it is a very crazy time down there. RareColoredDiamonds.com is Harold's website, RareColoredDiamonds.com. This week, a rare 88-carat diamond is going to lead Sotheby's Hong Kong. It was announced that they're having an auction. April's magnificent jewels and jadeite auction at Sotheby's Hong Kong, a flawless white diamond with an estimate of nearly $13 million. For those that have had a chance to see the diamond, one adjective comes to mind according to David Bennett, who's the chairman of Sotheby's International Jewelry Division. Breathtaking. Barely any diamonds of this weight are known to possess the same exceptional qualities, purity, and perfection as this remarkable stone, which is so full of fire and blinding brilliance. The diamond comes from a 242-carat rough stone recovered from De Beers mine in Botswana. It took several months to cut and polish. Picture of it in our free weekly newsletter. It is gorgeous. Graf to unveil a watch paved with 60 fancy yellow diamonds at Basel World. For the upcoming Basel World Watch and Jewelry Trade Fair, Graf will unveil an important collection of jeweled watches, each showcasing diamonds using what the company describes as pioneering jewelry watchmaking skills. The first watch in the collection was unveiled Tuesday, with the entire piece paved with 60 fancy, vivid yellow diamonds totaling more than 25 carats. The price of the watch was not released. Harold, we have a picture of this watch in our free weekly newsletter that people can get through you at rarecolorediamonds.com. But man, is this watch gorgeous. The yellow diamonds are so bright and beautiful. If you're wearing that watch, you walk in a room, you're going to be the center of attention. That's a beauty.
You bet. Especially vivid yellows. So they had to be about a quarter carat each, obviously. And vivid is the highest saturated color. The diamond watch is just beyond anything that you could imagine. It's just so special. I couldn't believe it when I saw it. It was just so stunning. There's not another watch like it, obviously.
We're at the end of our podcast. Some fun stories. Well, maybe not so fun if you purchased this painting. The Louvre snubbed the Leonardo da Vinci Salvator Mundi painting 15 months after a Saudi prince paid $450 million for it. They don't want to exhibit it because they think it's not real. May have been done by Da Vinci's assistant. Harold, you think they would have got that figured out before you made the investment of $450 million that maybe was not real?
Well, that would be on the auction house, not on the buyer. So that would be a real coup, because $450 million, probably including fees, has got to be paid back. If they can prove that, and I don't know how in the world that they would have proved it, but if they can prove that that it was a phony, then they're going to have to come up with the money.
You would think so, but
yes.
It's crazy to spend that kind of money. And this thing, it disappeared for a while. No one knew where it was. And then all of a sudden, they want to show it. And it's like, no, I don't think so. So there's a backstory here we don't fully understand or know, but eventually I'm sure it will be revealed to us. But $450 million is a lot of money. On the sports side of things, Manny Machado agreed to a 10-year, $300 million deal with the San Diego Padres. Harold, $300 million, $30 million a year. That is a lot of cheese. You're getting a lot of money. Hopefully it's a lot of home runs for the Padres, because he is definitely getting paid.
Well, he's getting paid, and it's all guaranteed. It's the only contract of its type that has been guaranteed for the full amount. So if he gets hurt or he doesn't, or whatever the situation is, he gets paid for the rest of his life, basically, or for the next umpteen years. $30 million a year.
The next guy that could get really paid in a major way is Bryce Harper, who played with the Washington Nationals, used to be the Montreal Expos. Well, he was offered $300 million to go back to play with the Nationals. He turned it down. They're saying maybe Philadelphia might take him at $350 to $400 million.
Wow.
We'll have to wait and see on that. And former San Francisco 49ers quarterback Colin Kaepernick agreed to a quiet settlement with his lawsuit against the NFL of colluding to prevent him from securing a contract as a free agent. There was one other player as well, Eric Reed, who settled his case. He just recently signed a new 2-year deal with the Carolina Panthers, but they're saying Kaepernick, Harold, $60 to $80 million. His lawyer, Mark Garagos, thinking that he will play again. I personally don't see him playing again. I don't think he's good enough. He was on the downslide to begin with when everything started to happen, and then you add in he hasn't played in a couple of years. I just don't see it happening. Maybe a team will sign him, but his skills are on the downslide. I just don't get it.
Me neither. I don't see it. I wouldn't want him on my team. He's a cancer. He caused all of this. So I agree with you 100%. I would not want to see him on my team. the Patriots, even though there's rumors saying that he could go there, but I just don't see that. I would hate to see that. I don't think the fan base, he's not a likable person, so the fan base is not wild about him. I agree with you, Randy. I don't think any team's going to pick him up.
I just think there was a better way to protest. Putting a knee down during the anthem, it's disrespectful to your anthem and your flag. A lot of people fought for freedom based on that flag and those principles. It's not something I would do. I think there was a far better way to protest where it could have been done in a much more beneficial way to help the people that you're trying to advocate for by protesting. That story is not done. I don't think Kaepernick comes back in a major way. We will see. Any closing thoughts?
Well, again, we got to watch the price of gold right now. Again, it has been moving. We need to see it break above $13.80. It's only $40, $50 away, which is not a big deal. We saw, $15 one day this week alone. So, again, there are obvious reasons why gold is starting to move up. And the fact that the U.S. dollar is still strong means that there's other factors out there that are bullish for gold. My feeling is primarily because of Trump and the Russia situation, and there could be more fuel there than we see. But again, I think that's what the situation is. And if I was a betting man, I would say the one situation that could bring the price of the U.S. dollar crashing down and the Dow would be if they prove that Trump had something to do with Russia and the elections. And we're going to find that out very soon. Again, my feeling is that there is something there, and the market is definitely reacting to it.
I know on the Drudge Report, they're saying the Mueller report next week, ex-Intel director saying that the report will come very soon. We'll have to wait and see what they found. Harold, thank you for your knowledge and another great podcast.
It's my pleasure, Randy. I wish everybody a wonderful weekend and a very profitable day.
Connect with Harold at rarecoloreddiamonds.com. Learn about investing in rare pink diamonds from the Argyle mine in Australia. The mine is shutting down in a couple of years. 90 to 95% of the world's pink diamonds will be taken out of the marketplace. They'll only have a few more tenders. There is a great opportunity there. Connect with Harold at rarecoloreddiamonds.com. Get the free weekly newsletter, the companion to the podcast. You can read all the stories that we talked about today. That's it. Another edition of the World Financial Report podcast. For Harold Siegel, my name is Randy Marshall. We will talk to you next week.